Good evening, everybody, and welcome to Live Market Analysis for another week. It's 15th of April. It's a pleasure to be with you as we chat markets. One more time, the disclaimer before we get started this evening says that everything we're going to discuss is information only. If you were to call it advice, it would be considered general advice because it has not taken into account your personal financial circumstances, objectives, or needs. Before you act upon any of this advice, you should consider it very carefully or seek the help of a financial professional to determine its appropriateness for you. Apart from that, it's important to remember that markets are risky. Trading and investing is risky. Inevitably, you're going to lose money at some stage. Ultimately, it's you, not I, who's responsible for everything you choose to do. With the boring but important bits out of the way, head over to the Google Meet platform that you're all joining me on and find the chat window there and type in your requests. It could be anything stock related, ASX, USA. I've got a request from the TSE, the Toronto Stock Exchange this evening. We'll look at that. We've also got a request for a cryptocurrency. We could be looking at indices, commodities, anything from the universe of securities out there that you want to talk about. But you also might want to talk about the methodology of trading, the money management of trading, the mindset of trading. Happy to go into any of those questions with you. Let's head over to the Amy Broker screen. I'm going to keep in mind tonight that I'm going to remember to change the screen every time. And I'm going to kick off with a bit of a whip around the grounds, which is customary for us to do at the beginning of live market analysis. Starting off with the Nasdaq last week, we said going to grow a little bit more cautious again, but again, it's all about just managing risk, not necessarily adding new risk to the portfolio, maybe being a little bit more aggressive at taking profits on things, being more aggressive potentially at instead of adding full risk positions or adding a third to something, maybe you might add a sixth or something, or a little bit less. That was the general idea last week, because we were seeing some signs that we were losing a bit of short-term momentum, and that's all it was. Long-term trends were still very much up. I don't think anything's really changed. Here we are a week later, and we've had some good candles, we've had some bad candles, and we've pretty much gone nowhere in that process. Friday's candle is disturbing in that it's a black candle. We closed near the low. We're pressuring the short-term uptrend ribbon, but it is only the opposite of Thursday's candle, which in theory is very, very good. And really all of this, I mean, that candle there, this candle here, here. For me, it all just smacks of a market that has found equilibrium. We know the most basic tenets of economics. When supply is greater than demand, price goes down. When demand is greater than supply, price goes up. And when demand and supply are equal, that's I think where we are now. Just as much reason to be buying as there is to be selling. We've found this equilibrium. Doesn't mean we're going down, because who's to say that supply doesn't diminish, and or, important to note there, and or demand doesn't increase. So supply diminishes and demand increases at the same time, price goes up. Or it could be just one of the two. Supply might even stay steady. There might be just as many people as bearish as they are right now, yet there's just more demand out there to overwhelm them. Or demand might stay steady. There's no reason for anybody to buy any more than they are right now, but supply backs away. And in that supply vacuum, demand, therefore, to fill their boots, have to pay more and more. We're in a holding phase. We could go either way, and let us see which way we do tip. In terms of our portfolio risk, I think it's important to always discuss this at the start of the presentation. I'm going to go status quo. Again, I don't think you need to add a great deal of risk at this stage until we get better signals like Thursday candles, at least a couple in a row. Wouldn't that be nice? A couple of white candles in a row instead of big white candle, big black candle. Hey, if we've got a couple of big black candles in a row, you'd know again to take that next step back on your portfolio risk. Other important charts to look at in the world of big macro. Well, this is not an important chart to look at. It's the Dow Jones. It's the 30 biggest blue chip stocks. I don't really think it's got a lot of relevance in this day and age, although when I was a whippersnapper, cutting my teeth in the markets back in the early 90s. This is the one I did look at. But we can see here this definite price action downtrend now. So lower peaks, lower troughs, very clear, big black candles. So that, unlike the Nasdaq, which has a spattering of white candles and a spattering of incredible white candles out there, this one actually is quite decidedly bearish, I think. Would you call that equilibrium? I don't think that's equilibrium. I think that's more supply side oriented. And then we get to the Russell, which I think also is more supply side oriented. And we're getting maybe a bit of a feel that outside of those big technology plays, there might be a bit more weakness out there and more justification for conservatism in our portfolio management. Let us head over to Europe. We're looking for, I guess, signs or broader signs that we're going risk off. I would also call that a price action downtrend. Cluster of black candles towards the end there. It's still short-term uptrend, just. You can see that the light green zone is no longer light green, it's orange. We've closed beneath it. We're only kind of just hanging on to this notion of a short-term uptrend. It's very, let's call it a neutral trend then, and very probably, therefore, very close to turning down, but long-term trends are still up. And that's just to summarise what we're going to see on the rest of them. I think they're all pretty similar here. And that's the Spanish one. There is a point of difference, and that's the FTSE. Now, the FTSE is a little bit like our market in that it's dominated by big banking and resource companies as well. We know BHP and Rio Tinto also have listings over there with a couple of other big ones as well. Glencore, I think, is one of them, but correct me if I'm wrong. And Vale, I'm pretty sure, is listed over there, but again, shout at me if I'm wrong. On the point of shouting at me if I'm wrong, I'm going to put your shouts over here up where I can see them. I need to remember to do that. And I'm going to grab the offline requests and put them over this side of my screen so the two shall not cover each other. And I won't make the mistake of not changing screen. So interesting to see there, see that FTSE do so well. Now, but I was going to skip over Asia. No, let's not skip over Asia. Let's just do it quickly. The Hang Seng coming off that long-term downtrend ribbon. Looks like some problems there. Nikkei starting to roll as well. So we're seeing this globally coordinated weakness in equities, but only modestly so. Nifty 50 is actually still looking pretty good. And the two most interesting charts, I think, in global indices, the Shanghai Stock Exchange Composite today had a big day up, massive day up there in China. We do have a data dump coming up later in this week. We've got industrial production, we've got unemployment, we've got GDP, and there's a couple of other interesting things there as well. And even more interesting, I think, is not only the up candle there, but it's actually a bigger, fuller white candle here, where we're kind of seeing as much as I would have said, it looks like we're about to slip below that long-term downtrend ribbon. Today it looks like it's holding, and I think that's giving the FTSE a bit of a boost, probably prevented us from having deeper losses today. And it should also be good for where I'm heading next, which is skipping the Aussie market. If you saw my evening wrap today, we've seen the analysis on that. Not a little bit, we're definitely holding pattern, we're definitely equilibrium there, lower peaks, lower troughs as well. We haven't closed beneath 77.41, but not far off it, and more of a sideways trend than an uptrend in the short term, long term trend still up. Where I'm going with this is to get over to base metals, which are, again, among the most interesting charts we're going to look at tonight, because look at aluminium there. What a rally we've seen. When you kind of pair that together with the FTSE, we saw the FTSE outperforming those other global indices, and those moves in Shanghai, we're starting to see this idea that maybe something good is happening in China, and that's having an impact on metals prices, which should help us as well. Copper, we know, has done extremely well. We're up at what I do think is going to be pretty important resistance point up there, and I'm trying to see how that all marries up. Well, we've got a point here, but it's not showing up on the weekly chart. It might be intra-week, but that doesn't make any sense. I'm trying to figure out why it's not actually showing up there. I don't know, vagaries of the so there you go. That's it there. We're looking at a closing week basis on a line chart versus the intraday high. So when we get, because don't forget the London Metals Exchange, and that's where this data is coming from here. That's why it says LME up the top. We get a PM fix. That means you get one price for everything that happened on the day in the afternoon, the settlement price. And obviously on a day-by-day basis, you can only really join them together by a line chart. There's no point playing candles when there's only one point. When you get to a weekly chart, because you have 5 points during the week, of course you can have an open, high, a low and a closing, create a candlestick chart there. So I think it helps to look at a weekly chart here when we're looking at LME metals, and then on the daily charts, the line chart. But we're up to a bit of a level here, let's say, a bit of a level for copper, and then actually there's a bit of another level not far away. I think that's going to be a bit of an issue there. And then if we keep going, probably up there, and if we keep going again, now we're really talking a big copper move to get to any of these retracements. We'll head back to the daily chart. You can see we've had a little bit of a pullback already from that level, and then we're bouncing back up to test it again. Remember, the more tests we can have of a level, the greater the likelihood that we will eventually get through that level. I wanted to show you, not Ioneer, I'll look at that in trading view, but I wanted to show you that nickel hasn't moved. I think that's very important. Look, that's not fair. It did move up, but it's still being bounded. It's still being impacted. What's the right word? What's the word? I've lost it now. Dragged back. Impeded. That's the word. Impeded by the long-term uptrend ribbon. Lead is above it. Look at these moves in base metals, ladies and gentlemen. Tin is going exponential. So if you own Metals X, that's actually one of our requests tonight from Roscoe. That's why Metals X is going up. And then we've got zinc also starting to move. These are fascinating moves, because look at this. I mean, it's a year since we've seen, well, it's been more than that, because, I mean, it's a year since we've seen movement, but it's much more than a year since we've seen upwards movement. So something really amazing is going on there. We'll have a quick look at lithium carbonate here. I think we're very much in a holding pattern. I think, again, we've found equilibrium here. I'm happy to stand corrected, and the market will correct me by printing a big white candle to get above, say, 118,850, 121,950, ultimately 125. I think that's a key level to demonstrate that we're back in a demand side phase. I'm not so sure it's going to happen. Beneath 105,800, I think we're in strife again. We could go back and test those lows, but probably we're just going to go sideways for the time being. Lithium carbonate is very much sideways, although there's some strength there. Hydroxide sideways, and the spodumene, the rally there in the index is up, and we've had a bit of a drop in the Platts contract. Now, heading over to silver, many silver bugs out there, at least there were last week, and I tried to temper your enthusiasm on silver and silver stocks last week. Look, to be fair, it has been very, very strong. It was not a runaway bull market. I would have been shocked if that was to occur, because we are coming up to some pretty important areas, or we were, as at last week, noting some significant highs here through 2020 and 2021. We stopped there in addition with the round number. No surprise, Friday throwing up that huge upper shadow, low close. That is very much indicative of a blow off top. We might look at silver futures later on, but at least we can get some volume. You can see I've got no volume here on this. This is the spot contract. So we won't have volume on spot contracts. And then looking at gold, a similar blow off top. Heading out to the weekly chart, that one has been printing all-time highs. If there was to be a pullback, you can see where we're going to start to find some demand. Let's quickly head over to the trading view charts to fill in the rest of the blanks. I'm going to start with high-grade copper. We can see that one pushing up there. I might just head over to here where I've got some scratchings. Leave that one behind. And scratchings will appear in a second. There's the scratchings. This is a bit of a level here as well for copper. Doesn't mean it's the end of the trend. It just means it's a point where we're going to find supply. Hey, did we find supply? Is supply manifesting itself there? You betcha. Now, there's been some talk that some authority, don't quote me which one it was, has prevented Russia from delivering certain metals, and therefore that's why there was a bit of a pop in this one over the weekend. And since we've seen supply continue to manifest even into that good news, I'm happy to stand corrected. You see a big white candle between 433 and 437. We're going higher. But at the moment, I think we're just respecting that level for what it is as a potential point of supply, and supply is manifesting there. I promised you we'd look at silver to get some indication of the volume, because now we're looking at futures contracts, and futures contracts do have volume, and we did see significantly elevated volume here, and pushing obviously into the ranges. And I think that volume, that range, that volatility range, and the candle would indicate, again, we're moving into an equilibrium phase for silver. We're probably going to spend at least some time here, if not pull back, and logical places to pull back would be to 25.67, but also to the light green zone. For the gold bugs out there, you know I'm not one of you. I think gold is a trading instrument and nothing more. I don't believe that in any version of any future we'll be paying for loaves of bread with shavings of gold. Blow off top also, high volume, high volatility, and probably more likely, I think, to come back and test 23.37, 25.85 light green zone, and then we'll see what candles we get from there. The trends are fine. The trends are fine. But that does look like it has all the hallmarks of a blow-off top at this stage. Let us head to utilities. Uranium, which I guess is used in power utilities to generate electricity. And that's how I'm going to save that comment. Still trying to make higher troughs, still trying to break up. It's doing it extremely slowly, but for now, I think we can say that the long-term trend ribbon has held. We'd love to see it push a little higher to give us further confirmation. We'll head back to crude oil, and I need to go back to my candlesticks here. I've got an article coming out tomorrow with more technical analysis on crude oil. I'm going to look at crude oil seasonality as well. But we are seeing a bit of a false event or a false start with respect to the events over the weekend in the Middle East. That in itself tells you that the market is well supplied at this stage. 89.49 is a big level, and 93.45 is even bigger than that. However, trends are still very strong, and there's no reason why we can't continue to grind higher into those zones at this stage. Having said that, these candles are not good candles, are they? You can see increasing frequency of black candles, upper shadows as well. I'm not concerned at all until we start closing beneath, say, 83.12 and or the short-term trend ribbon, and then something's really wrong. If it's not going up on increased tensions in the Middle East and it's closing beneath short-term trend ribbons, then something's really wrong. But I'm just giving you a sort of a guide as to whether, if you've got oil stocks or you're looking to buy oil stocks, maybe that might assist you. Whilst I don't think this is going to be rampaging up. So what I'm telling you here is I don't believe the hype. There's so much hype out there at the moment, people trying to get you excited in the media about gold. The number of stories I've seen about gold over the last 2 weeks is astonishing and disturbing, and you're probably close to a top when there's that many going around. I think that's all for... I will note that Brent Crude looks better than West Texas. So if you are going to trade oil, if we do get a breakout, this is the one you'd prefer to trade because we're much closer to the breakout. The price action is better. The candles are better as well. We're still seeing a bit of supply up at that area. Why? Because it's an area it's a point of historical supply. It's going to give us supply again. While we're here, might as well check out thermal coal. Actually, if I squint, a little bit of an uptrend there. Hey, at least it stopped going down, and probably also coking coal, metallurgical coal, has stopped going down for the time being as well. One more to check here actually is iron ore. We've talked about this double bottom pattern that's forming in an area of historical demand. That is 94, 97, 95, 40. Some big candles, white candles in there. I wrote about it in my evening wraps. And some good candles since then telling me that I think we've turned the corner here. In fact, we've actually now potentially on this candle closing above 111.15. So we can go have a crack at higher retracements from here. This would be, it's almost actually a turnaround. Well, it's not turnaround because we're not at the long-term downtrend ribbon, are we? This is aggressive setup sort of stuff. Not that you could trade it, but you might then extrapolate that back to your stocks. And we're going to finish here with a quick look, if we can load anytime soon, with our bonds of course, all-important bond market. And we did see a rise last week on the back of the worse-than-expected CPI. Again, I've got a data there an article there that analyses the data around that and changing Fed expectations. We've gone from expecting 3 Fed interest rate cuts this year to, what did I say in the article? I think we might only get 1 now. Okay, I'm trying to remember. It will be, if you click on me, there you go, this is how you do it, you click on me, and there I am, and it's that one there. Inflation data torpedoes June cut hopes. What's the path of US interest rates now? And that's what it was before the US CPI data during the week. Let me make that bigger so you can read it. And we were thinking 3 cuts this year and a 4th one in March or April next year, and then we've ended up going to just 1 cut this year in either November or December, 87% chance by December, 76 by November, and then 1 in March. And that is a massive, massive shift in sentiment, hence this pop in rates. And stocks hate higher rates. Okay, that's the message there. Let's head home, but far more modest, isn't it? Far more moderate, and possibly why we've had a more moderate pullback as well. And let's head to Japan, and that's we're looking for the nuclear scenario here, and that's actually starting to look quite disturbing. If this starts to push towards 1% and then get over 1%, this could create some turmoil in markets. Keep an eye for that. Keep an eye out for that chart. Hey, if that was a stock chart, what would you be doing? Would you be buying it? Would you be holding it? Would you be selling it? I think you'd be buying it. That means you think rates in Japan are going up, and that could. The problem there is if rates in Japan go up, a lot of money gets sucked away from overseas markets back into Japan. The Nikkei wasn't looking that good though, but could end up in Japanese bonds. Well, that's possibly where they could go if the rates go high. Okay, that is enough of whipping around the grounds. Let me head over to the. I'm just making sure there are no red alerts over there. So I'm going to head over to your offline requests because I understand that not everybody can join us on Monday evenings, and in the interest of giving everybody a fair go, I'm going to go to Roscoe, who's asked for Metals X. So let's head over there. We happen to be on the weekly chart. No harm. Let's look at the weekly chart. What do you reckon about that? Looks like Japanese government bond yields. So that's a good sign. Let's drill down a little bit, go to the daily chart. We've had a fantastic move here. Let's do a little bit of navel gazing. Where was it an aggressive setup? Can you cast your eye back? Where was it a turnaround setup? Is there something we can learn from this chart? Okay. I reckon. Make sure I've got the right colour. Let's go that one. I reckon that's the first point for a turnaround setup. And I think I know I don't do my daily watch list anymore, my short list, but I think you'd agree that that's where it would appear in my short list. So that's my turnaround setup. Could we have found something earlier for an aggressive setup? And I don't think we could have. There's just chop and churn, isn't it? And this shows, look, if I really squint, will I find something on this day here? And I'm looking at this one here. And there was no volume confirmation at all on that day. And there was a little bit of a build-up before then, but no, I don't think that's the day. I don't think you really could say that's the day. And you've got all this supply up here as well. And I think it's clear as day, isn't it? Knowing my system, that's it. That's the point you get in, 33 cents. No real major issues here in terms of having to get out. I mean, it's held the short-term trend ribbon really well. It never went to lower peaks and lower troughs. And I think you're still full risk position. I can't see any reason not to be full risk position here, especially considering that weekly chart. Could I buy it here? It's a bit of a ways away from the light green zone. You know what? I'd like to find something closer to here. Find another chart, not this one, obviously, but find something else that looks like that and buy that one instead. But certainly if I had this 100%, I would happily hold on to it. Hey, you could take a nibble. And you say, well, why would you take a nibble? Because it's compelling. Is this a picture of excess demand? Is this a picture of of investors not caring that this has gone up as much as it's gone up, just totally feeling there's more in this. And that's why they're not selling. We've got such limited supply here. We've got such great demand, and that's why there is compelling evidence to have some sort of position. Let us go to Ross's second one, which is not over there. It's over here, HGO. It's a copper stock. I know that because I wrote an article about copper stocks. Again, head over to where I showed you to find that one. And from memory, I said this. Look, it looks good. We're seeing signs of excess demand coming into the system. Needs to print some white candles, I think was the thing I left you with on this one. Today is not bad. It's not bad. Actually, it's not bad at all. We've got a little bit of an increase in volume, a little bit of supply removal, a little bit of interest coming back in. Probably could have been better with a bigger white candle, but not bad at all. I'm not sure I'm a buyer of this just on the basis that I'm sure we're going to find better stuff than this today. But if I had it already, 100%, I'd be holding it with a full risk position. And look, if I was, without looking at the other copper stocks, I can't say whether this is going to be the best looking one. Maybe we'll look at some more on them today. But let's just leave it at happy holder, not far away. Look, another nice candle with volume, and then it would be yes for me. Obviously, we've got a big point of supply up here that we're going to have to deal with in the not too distant future, but a happy holder if I had it. Looking for Ross's next one, you can see habitually I'm looking over that side, but that's not where I'm looking anymore. Let's go to Santos, which looks half decent, doesn't it? And Santos has a history of looking half decent. If you don't believe me, let me just zoom out and show you all the times Santos looked half decent. I think it looked half decent around here, half decent around here, half decent around here. Looks half decent now. It definitely looked half decent over here. It probably looked better than half decent over there. It looked half decent all of these times. The problem with Santos is when it looks half decent, it tends to fall a long way. That's just the nature of the beast. I don't have any interest in trading Santos. I don't think, again, we talked about whether I thought there was a future where we'd be paying for things with gold shavings. I don't think there's a future where I would ever own Santos shares, but that's just me. And I certainly can't see any major reason to own them now. There's a big point of supply up here, which we've tested it enough times, haven't we? I don't know, today's shadow, uninspiring. It's half decent. I'm the wrong person to ask about Santos. AIC Metals, another one of those copper stocks I covered, A1M is the ticker code there. What did I say? I think I said the fledgling uptrend looks okay. Bit of supply coming up around here, no doubt about it. We're not far away from that. I'm not sure if I could make it work on a risk-reward basis. If I had it, I could hold it. I don't think I'm falling over myself to rush into it, though. Let us go to Peter, who's asking about NWL, which was looking really good. There was some sort of fundamental announcement, or dare I say a takeover perhaps, or a trading update. It could be a combination of the two, I don't know. Honestly, I don't care. I really couldn't care less. All I care about is the candles. And I tell you what, on this day here, all I would have cared about is running a full risk position because it looked amazing. That is just a perfect chart, 100%, 10 out of 10, can't beat it. Absolutely magic. And I've told you on that day, there's absolutely no reason at all to do anything but continue to hold this. And I'm very frustrated with my Amy Broker screen here and this arrow and my inability to move it one step at a time. So maybe I'll do it this way. Even on that day, it would have said, hold on to it. There's nothing else to do. That day I would have said, there's nothing to worry about here. Nothing at all to worry about. And on that day there, so I'm trying to go one at a time, it's not letting me do it. On that day there, you would have said, Carl, mate, you got no idea what you're talking about. Why didn't you tell me to get out the day before? And I said, look, I didn't know it was going to go down. Sorry, I can't tell the future. All I could tell you is the day before, people really wanted to own it and nobody really wanted to sell it. Look, there's definitely an influx of supply today. That supply was overwhelmed the demand, and demand, which has been so strong up to this point, was caught off guard. Look, they came back towards the end of the day, and that's a good sign. If you're so inclined, I think maybe it's not the right word. I don't think I would say maybe. I think I would say if you're that way inclined, it would be prudent to go minus 1/3, because if you blend these two candles together, if you blend these three candles together, you're getting something that looks pretty nasty, and you also closed beneath. I reckon you've closed beneath that trough there, but I would have to double check. I think for all intents and purposes, minus 1/3. Just take a precautionary measure, nothing more than that. Hey, we're still plus 2/3. If it heads back up, happy days, we've got plenty of skin in the game, and that other third we can go look for something that's closer to the beginning of its trend. And then we would have got the next day. Let's see, when you're going, oh, I'm glad I got out a third, actually. What do we think about this day? I think this day is telling us something's really wrong with this. We've definitely closed beneath that trough, if we weren't sure before. And this bounce, this demand that was coming in, telling us that actually things are okay. We're at the light green zone. Light green zone historically has been extremely good at telling us where downtrends, pullbacks terminate. We're about to close beneath it. We're very close. I think you could go. I think you could go another third if you're really jittery. If you're not, stick with the 2/3. But I think there's enough evidence there to take some action. If you did take the third, you're probably going, I wish I didn't. If you didn't take the third, you're going, I'm happy. Is there any reason to do anything else? I think it actually looks like the short-term uptrend is holding here. That's a problematic candle, upper shadow, but I don't think in itself it's enough to take any further action. But it is a problem because it's telling us that this area here is behaving as supply. That is the area. That gap is the problem. The gap happened because you've got this tectonic shift, this sudden shift in the markets thinking towards wanting to supply, and when you get back into that zone, you've got people that want to supply in there still, but also people who kind of know the momentum's dying here, that's that place they'll be targeting to get out. And then let's see, and then boom, okay. So we're happy we've got out a third. I think there's we do not pass go, we do not collect $200. I think we're pretty much done and dusted here. If you only had a third left, there's no question. If you had 2/3 left, 100% for me, a third is gone. The question is whether you're going to get rid of 2/3. I think that's a 2/3 candle. Not quite the species ending event, but pretty darn close to it. And I think that's all enough there. Now, would you have got the benefit of the bounce for getting out the final third on these two? No, but you wouldn't care. You wouldn't look at it again. Who cares? Why would you look at NWL again? That trade's over. Get it out of your mind and move on. Okay? That's how I would be treating that one. I think that's a nice little case study and probably worked out better than the BHP case study from last week. Let us have a look at STK. And we're going to remember to always go back to our default zoom. So we're looking at each chart on a like-for-like basis. It's especially important when you're doing a scan. Fine. Strickland Metals, we're getting a bit of a push back up. I think we might have said aggressive setups or turnaround setups last week. I remember pointing maybe to this candle here, and not a lot of volume there. That is holding this one back a little bit. Love to see a spike in volume, especially on a big white candle to take it through what is going to be clearly a point of supply. I know it's a point of supply because I pointed it out as thus last week, and that's where we are right now. We're kind of hovering beneath that point of supply. I'm fine with it. Look, if I had it, I'd still have a full risk position. I don't think there's reason to manage your risk at this point in time. What would change that? Big black candles, big upper shadows, lower peaks and lower troughs, but I think we're fine for now. Would I be buying it? I don't think you need to buy it based upon those last two candles, but a nice big white candle, bit more volume, closing near enough to this high. I don't have to close above that high, but near enough to the high, then I would happily add some risk to that one, but I don't think we need to do it today. Those two for you there, Peter. Going to go to Jason and Small Caps ASX from Twitter, who asked me about WR1 ages ago. I've been so busy with market index that I haven't had a chance to get back to you guys. So apologies for my tardiness. Obviously, we've been looking at it, or we have looked at it in the recent past, because I've drawn arrows on the screen. And I think these arrows were to discuss, correct me if I'm wrong, the possibility of an aggressive setup and where they might come in. And I reckon I might have pointed to this arrow and said, I think that's too early. I would have pointed to this arrow and said that's exactly where an aggressive setup has occurred, and then I would have said possibly here and maybe not there because of the proximity to the dark green zone. I'm pretty sure that's what I said. Go back and check the tape. If I'm anything, I'm consistent, and that should be reassuring to you, because if I say the same thing about the same chart a couple of weeks apart, it means I'm working on a system. There's something systematic in what I'm doing, which means you can do it too. Fast forward to where we are, and this is a great candle here. So which is the great candle? That's the great candle. So this actually brings it into the realms of a turnaround play now. We've gone from aggressive setup because we're interacting with that long-term uptrend ribbon. That candle actually turned it to orange, which is an important sign. That's starting to sort of, you can see the candles, the moving average is converging again. So we're getting, the orange is getting narrower. The short-term trend ribbon is heading up, and we're seeing that the short-term ribbon has gone. Geez, I love my trend ribbons. Give me a thumbs up if you love my trend ribbons as well. Now, look at this. Look how good my short-term, look at the short-term trend ribbon. Look at this here. I'm getting lots of explosions of thumbs up. Because, you know, when it starts to, and the long-term trend ribbon is the same, but when it starts to offer you dynamic support, you know the trend has changed. And that's what's happened here. So that's all good. This candle here is fantastic. Would I have bought it on that candle? I maybe would have added some risk. I almost said yes, but then I saw that. So I think, no, probably a little bit close to that supply zone there. Is the last two candles a manifestation of the supply at that zone? I don't think so. I don't know why. I don't know why we're getting supply here. 150, I don't think that's even a big deal, to be honest. I can't say. I don't know. Unless I go out there and literally interview everybody in here, and the volume was 2.4 million shares traded, so however many people traded those shares, and then the next day, unless I go interview them and say, hey, you know, what made you sell today? Oh, really? You know what? I couldn't do it, and I wouldn't do it because I wouldn't care what their response is. I have no interest in why they're doing what they're doing. All I care is that they're doing it. Inexplicable, counter trend, not good candles. I don't like the fact that they've eliminated most of this great candle. I love that candle. Why are we not kicking on here, and why are we manifesting supply at a point where there's no real reason to manifest it? I don't think those, or I was going to say, I don't think those candles together are enough to warrant managing risk, and I'm going to stick with that, but it's very close. It's line ball. Certainly if we closed beneath that big white candle, I think we've got a reason to manage our risk, taking a third of our risk off the table straight away, and then looking for further signs to continue to manage risk after that. If I didn't have it, then I can't see any reason to buy it for all of the reasons I said up to that point. So hopefully, Jason, and Small Caps ASX, that was worth your while. I know sometimes people love the fundamentals on these, and they could certainly talk my ear off on them, but again, I have to reiterate, I don't. I'm sorry, I really couldn't care less. AVR is the next one. Anteris Technologies. And I think we're at the point, aren't we? I think if you've got it and there's many reasons to buy it, we can see, I won't draw arrows, but there are aggressive setups there. There are turnaround setups there. And we're now more in a maturing trend, and we're wondering if I had it, what I'd do with it. I'm going to draw boxes, and I'm guessing you're very good now at drawing boxes on screens, aren't you? In your trading view. You're very good at looking at the corner of your left eye, and like as good as the stuff on the right looks, you go, oh, no, red box, draw. Because we're going to have some issues there, and we're going to have some issues here. This is just part and parcel of turnaround setups. That doesn't make them bad; it just makes them different from continuation setups. So buying is off the table. We know that much. Okay. If we had it, what do we do with it? And I think these are always good case studies, good case study opportunities for you playing it along at home, either live in session or in the video, to say, well, I don't have it, but what would I do if I did? And I know you're all saying it now, either in your head or shouting it at the screen. I can't hear you, but is there enough of a reason for a minus 1/3 there? I think we're very close. And I think what we do have, which I think is fantastic, is we've got some, look at these shadows. Look where these shadows are appearing. And you can see the fingerprints of demand just working there. We can see the fingerprints of supply. And I think on balance, supply is starting to win the battle, but demand is vigilant, coming in around that level, around those lows, around those shadows. And we can see why demand's there. It's because they've worked there before. They've shown us their fingerprints are in and around that level before. You could say, if we closed beneath, say, today's low, because we really tickled that level today and then closed more than halfway down the bar. So that's the balance point of that candle, and you would say on balance, the supply is in control of today. So that low there is 22.71, and you never go 22.70. That's too close. Give it a rule of thumb, 0.5%. Okay, so 0.5% is pretty easy. 1% is about 23 cents, and half of that's about 12 cents. Okay, round it up. Give it a little bit of leeway. So that would be, say, a 22.59-ish. Close there or below, and I think you're taking a third off the table. Okay, there's another little level here, so this could be a second point to take some risk off the table, and there might be a third point on a close beneath the short-term uptrend ribbon. Okay, but we might also see some lower peaks coming in there to give us another level in the meantime. And all we're doing here is just creating a plan for our exit. You may have heard me use the analogy. James Bond walks into the Monte Carlo casino. What's the first thing he looks for? It's not the bar where he's going to get his martini shaken, not stirred. It's not the curvaceous brunette at the bar that he's going to go and talk to. It's not his arch nemesis at the baccarat table plotting the end of the world. It's the exit sign. Okay, James Bond always, first thing he looks at is where's the exit sign, so he knows how to get himself out of that situation if one of his arch nemesis minions jumps out of a broom closet with a machine gun. He can get himself out of there, and that's what we're doing all the time in our trades. We're looking where our exit is. Now, the opposite of that is to not have exits and just hold on forever, all the way back down. And that might have been your plan before you met me, but it's not your plan now. Let's head over to CHN, talking about holding all the way down. I could not have a better segue than to Chalice Mining because of all the promise that this one had, and it had plenty of promise. If you don't believe me, look at all that promise. Look at that, is just absolute promise turning into absolute despair and just a bewilderment. Hey, Carl, it's got all this good stuff going on, and yet it's a fraction of what it was. Hey, don't ask me. Ask the people who are selling like crazy, and ask the people who are not buying. But it's showing signs of turning now. I actually think there's some decent candles there. It's nothing more than aggressive. So when we're having an aggressive trade, we're having a little tickle. That's all we're doing there. We get a little tickle, a little tipple or tickle. Both words are appropriate, but nothing more than that. Today is a bit of a pullback day. Doesn't change things. I wouldn't be going in based upon today's candle, but if I had it, I could still run the full risk position of what I had. If I'd been holding on forever, is this a point where you get out? No, I think it's to some extent it's turned the corner, and you can continue to see where it goes. We're probably going to have an issue around here. We're going to have an issue at the long-term downtrend ribbon, without a doubt. I think if you're not in it, I think on the next white candle you've probably still got just enough room to go before the long-term downtrend ribbon, but maybe not enough to this point of supply. So what I was about to say was, look, here's kind of the candle, and even here, like the black-white is very good, because blend those together, it's a big lower shadow after a white one. So you've got the white, and if you actually blend those, you've got a lower shadow. So look, any of those candles are aggressive setup territory, and then from there, I think you're probably a little bit too late for that, and then you're having to wait for the turnaround play. But today's candle nullifies the prospect for buying it on today's candle. That is all of your ASX offline requests. Let's head over to your online ones, and we're going to start off with Michael, who's asking about BGL, gold stock. We obviously saw that the gold price, bit of a blow off top today, and interestingly, and this kind of tells you how the markets really work. And Carl, markets only move based upon the fundamentals. Carl, you've got this thing called earnings, and when earnings are growing, share prices are going up, and there's fundamental value that must be respected, and net tangible assets and book to value and cash flow yields. Carl, please, none of this mumbo jumbo about your bloody charts made in black and white candles. But we saw that blow off in gold, didn't we? And the gold price was up by most measures, or very steady, and yet we saw gold stocks get hit today because traders look at the gold price and they go, okay, that's probably a blow off top. We're probably getting a pullback, which means I need to sell my gold stocks. And you've got all these people owning gold stocks saying, well, what happened today? Well, what are all my gold stocks here? Well, it's because of what happened on the chart of the price of gold. If I had it, what would I do? Is that a minus 1/3 day? No, I think you're being really, really nervous if that's a minus 1/3 candle. It's not a great candle. It's bloody awful. But the trends are still very strong, and price action is very strong, and there's still a lot of good stuff happening in here. And to illustrate how good it is, I'm going to turn it into a green coloured box because it's a zone of demand. As much as I think gold stocks probably are set for a bit of a period of consolidation, I can't tell you to minus 1/3 on that just yet. There's not enough in it to do so. Famous last words. But I have to call it how I see it. I have to call based on what I see, not on predictions, because I can't tell the future. RRL. Well, there you go. It's, where's the selling here? Where's the fears of the blow-off here? Another gold company and not a care in the world. We should go back to our normal zoom. And this one looks fine. I think this looks very, very good. It's a picture of excess demand. It's more of a turnaround play. It's not so much the continuation setup, because we can draw in red boxes all over the bloody place. But we have had some really good interaction here with this point of supply. So let's call this the MPOS over here. Let's go caps lock MPOS over there. This is also an MPOS, to be fair. MPOS, but we are testing this MPOS with this MPOS, and we're kind of testing it now. And we hit it last time with a bunch of black candles, didn't we? And then we came back, we tested it, and we would have thought, we're looking good there, and I would have said we looked good there, and then we threw in that shadow, and it's like, disappointing. And then we actually got a candle like the BGL candle, which is this one. It's like the BGL candle, isn't it? We were going, oh God, I can't really manage my risk here, but it's not that bad. Famous last words, isn't it? Because, boom, 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 the supply manifests itself at that MPOS. But we've done so much work at that at this MPOS here, so let's call this MPOS 1 and then MPOS 2, that we're coming into it now. We can see that there's far less supply manifesting itself at that level now, and it kind of looks ready to get through it. If I had this 100%, I'm a hold. If I didn't have it, and I was looking for some gold exposure, and I was looking to add risk in this market, I can't see any reason why I wouldn't add some risk here. But there's a few buts in there at the moment, isn't there? Those two few there, Michael. Linda saying, hi, could you please add your email address to yes, I can add you. I'll do that offline. But Linda, don't do it here, because once I click end webinar, all of those messages disappear. Okay, so please send me an email and you know where to do that. Or hit me up on Twitter. That's another way to do it. So admin requests elsewhere, please. Let's go to RNU for Wayne. This is famous last words again. I did have somebody, I've had actually two people over the last 10 days email say, hey Carl, I watch along with XYZ and, can I have access myself? And I've said, yeah, look, no worries. Market Index, LiveWire have asked me not to spruik this to the world. It's just you guys and girls, of course. But if there is somebody else you would like, I don't mind adding them. But they need to email me first. There's no other way to do it. If they are listening along with you, I prefer that not to be the case, because I want them to individually have accepted the terms and conditions first, please. That just covers me from a responsibility perspective. It's important to me. It might not be important to you, but it's important to me, so please respect my wishes in that regard. It's very easy. Just tell them to send me an email and I'll add them in, and they can have my trend ribbons as well. This is a free community service, okay? Everybody's welcome. RNU for Wayne. Aggressive setup. Is it an aggressive setup? I'd love to see more volume. I don't mind. I mean, today's candle's a little bit disappointing. But as of Friday's candle, I would have said, yeah, I think you could have a crack at it. And it's just a tickle, remember? I'll give you a little bit of a tickle. I think for it to be the atypical aggressive setup, we're seeing a far bigger shift, that tectonic shift in volume. It's not quite there. But if I had it, if I've been suffering on this one for months and years, then I think that's good, that we've got some signs of life here. I'm going to just reserve my decision as to whether that's an aggressive setup until I see a little bit more volume. But it's probably stopped going down. NVX, which we have talked about as an aggressive setup, and I think we might have talked about it. Well, I talked about it on that candle there. I've talked about it a few times since, but I think it's become a turnaround play, hasn't it? Was looking gangbusters. It's had two pretty lousy days in a row. I think with those two candles together, I know it's frustrating. Oh, is there enough for a -1? I think there is. And it's a third of whatever risk you have and hanging on to 2/3 and see how you go. I don't like those last two candles. Blend them together. It's a big black candle that's taken out the demand from the candle over here. Okay. And that really shouldn't be happening. Look, I don't think you need to do any more than that, because I think this area here, the lows through there, so really $1. It's going to be around $1, isn't it? So as long as it's holding above, say, 98 cents or 99 cents, I think we're fine. And look, only if you're feeling that way inclined at -1/3. But there's something not too nice going on with those last two candles. Nickel Mines had a big rally today, and actually it's turning the corner. And it's one of these official turnaround setups. It actually looks pretty darn good as thus. And we haven't talked about this one, have we, at all, very recently. Aggressive setup. I think here's an aggressive setup, although there's no volume, but certainly price action. Here it's more of a turnaround play because we've tested, and now we're going through a second time. Here it's more turnaround play, and here it's turnaround play, and today it's turnaround play. So yeah, no objections. If you've got it, happy to hold it. If you don't, I'm happy to add some risk based upon today's candle. We must go and draw some red boxes on the screen to make sure we can get 1-to-1. Look, I think we can. If we're looking for a bug out, certainly, probably a bug out there, bug out beneath the light green zone. I think we're sneaking in 1-to-1 there. So happy to go then on that basis. Let's go to, I'll skip the US ones, but don't panic, I'll come back to those. And we're going to go Karoon, which is a bit like Santos, isn't it? Looking good, looking bad. It looks worse than it is, because last week we draw this big black candle and we said, if you see that, there's a problem. We haven't seen that, okay? So big sigh of relief. We're chugging along up into, guess what, the MPOS that I drew last week. I think it's important enough to get all caps on that one. Turn my caps lock off. But that is an MPOS, and that's why today you can see there supply manifested itself at a major point of supply. Does that mean that we should sell it? Does that mean that is enough of a signal to -1/3? No, I don't think it is. I think there's balance of evidence. You look at what's working towards the upside versus what has started working to the downside. I still think there's enough evidence to stick with this one. I'd be concerned, however, if we close beneath that big white candle. That's a problem. Certainly beneath there, and then certainly beneath the long-term uptrend ribbon. But for now, I think, remember what I said before, where I saw supply coming in at a point where there was really no reason for it to come in. Those concern me. I can see why there's supply here, okay? But I think the demand can mop that up. But it might take a couple of tests. We saw in a previous one where it took a long period of testing to get through a major point of supply. Let's go to FND. This is a popular one. I tend to look at this every week. And I've given you, it keeps chugging along, doing exactly what you want it to do. And I've given you some points there in the past. I'm going to give you some more points. And this is what I love. I love it when trades do this, and all you're really doing is just drawing lines on charts going, well, this is what I'm going to do, And I think we come up to here, and then we go here, and we put that there, and on a close beneath, let's give you a number. That low there is 295, so maybe like a 292. Is there a -1/3 before that? Or maybe we did a third before. On these two candles. Yeah, fair enough. I can see why. So we're still plus 2/3, and we gave you some other levels where you might be minusing a third down there. Let's move these. So we'll move that one to there, and then I'm going to take this, and I'm going to say, no, I don't think there's enough in this candle, this candle, and this candle just yet to minus another third. So I think that's where we've got a third coming out. That's where there would have been a -1/3 there on. And I'll close beneath that one. And I lost my 268. Let's leave the 268 out of it, because we're going to get something beneath that. We'll get something before that, I should say. So this is where that's the new first point. And certainly that would be a second point in the absence of a bigger black candle or a lower peak and other signals. but full risk position. But clearly there is some supply coming in. Clearly we're not in this beautiful, just flowing period of excess demand. We've actually probably more equilibrium, if anything. Therefore we need to be alert. WIA, no need to be alert here. We have the pesky, that's not what I want to do, the pesky red zone, isn't it? That's why it's there, just coming off the screen. And we did see a little bit of a pause there, didn't we, on these two candles, but we're through it today. Happy days. If I had this, I would be selling some. Oh, there you go. You probably thought, you thought I was going to say, if I had this, I'd be a happy holder, you know, hanging in there, no reasons to sell it. I did see one, it's 10 cents. Now, I don't think this is the first time we've ever been to 10 cents, but it's the first time we've been to 10 cents, for long enough. And therefore, I think there's enough people who are in from 5 cents. You know, there were a bunch of people who got it at 5 cents who are doubling their money. And for that very reason, I think we're close enough there. What do we get to? 97? I think 97 is close enough. And all we're talking about here is minus a third. And it's an indiscriminate, it's almost an indiscriminate minus 1/3. It's not indiscriminate, it's 10 cents. But it almost seems just arbitrary, doesn't it? But that's how I work. That's how I roll. That's how I work. So I'd go minus 1/3 for no other reason that we're at 10 cents, but it means we're happily 2/3 from there. Let's go to S32, which is actually starting to become a turnaround setup. And in fact, today actually is, as a turnaround setup, the buy day. So today's the buy day. There is an issue here, okay, but I think there's enough in this one to have a go anyway. Yeah, I mean, look, this is probably the more likely place that we're going to have issues. Up at $4 as well. I don't think 360 is going to be the place where everybody's going, oh, that's where I want to get out. What did I say? Little bit of money. I think I was saying in the past we have identified that as our aggressive setup. Okay, but today it's officially a turnaround play. And it shows you how the model works, doesn't it? You go for an aggressive setup, you're adding your risk if you see other places to enter, and then you get your turnaround setup, and then it develops until it becomes a continuation play. And hopefully you experience this where you buy that aggressive setup, and then at some stage it becomes that continuation play. Wouldn't that be wonderful? And you'll see that's when this model really works for you. And if it doesn't go your way, we've got all of these signals to get us the hell out, don't we? Not all at once, but in stages. And sometimes that works for us because we're glad we only got out in stages, and sometimes we go, oh, probably should have got out a bit more. But I do like the not all in and not all out approach. Let us go to AIS. Let's just given time, please stop typing in any more. I'm not going to go past, I can see Peter's US stocks there because we can't be here all night. AIS, I'm going to pick up the pace also. AIS. Fine. Another one of those copper stocks. Great candle on Friday. Nothing so sinister today to suggest anything but hold. If I didn't have it, I think I could add some risk. There's going to be the only reason for trepidation is I think there's going to be some supply around here. Actually, that's still far enough away, I think, to not have to worry about it. But I could add some risk here. Maybe you might want to go, given broader market conditions, maybe less than a third. I'll leave that up to you, but it's a yes for me on that one. Going to SBM, another turnaround play, this time a gold stock. We are at very much interacting with a major point of supply. Let me see a couple more white candles here telling me that we've dealt with that. I think they're pretty important points of supply. I think there's a bunch of dead wood. I mean, if you've owned St Barbara before, or you're still owning it, you know there'd be a bunch of people that are just waiting to get the hell out. And therefore, this might be a problem. So look, next couple of white candles, a little bit of a maybe pick up in volume to tell us we're removing this supply up here, then I could go yes, but for now I'm just a watch and wait and see. Robert saying hello. Hello, Robert. Sudesh saying, is trading currencies, commodity or indexes on smaller time frames, for example, 1, 2, 10, 15 or 30 minutes, a successful strategy or generally not worth the effort? You could use my methodologies when you need candles though. So I hope you would agree, and this is for Sudesh, if you're watching 1 minute charts, they actually look very similar to what we're seeing on screen. Now this is a daily chart, but the 1 minute charts are quite blocky, aren't they? Because there's just not enough time for them to have that range of movement, to have shadows and the like. So you're losing some of that sensitivity that you would get from analysing candles on those very low time frames. But from, say, 15, 30, certainly hourly charts, certainly 4-hour charts, all of these things I'm teaching you, I feel will work, and you can apply them exactly as we're applying them now, okay? But to be consistent with your approach, you would need to check them in line with your periodicity, Sadesh. So if you're on a 15-minute chart, it's your job, and if you don't want the job, that's okay. Go do something else, okay? But if you're going to do it, it is your job, it is your responsibility to be checking the market every 15 minutes. Now, if you're trading shares, Aussie shares, it's not so bad. You need to check the market every 15 minutes between 10 o'clock and 4 p.m. Eastern Standard Time. Now, if you've got a day job, that might conflict with your day job, might get you fired, okay? And that could be worth a lot more to you than some crappy little stock that you're trading on a 15-minute chart. If you're unemployed, then that solves the problem. But you do need to be consistent, because I guarantee you that if you're not consistent in that fashion, the setups will come when you're not there. Okay, and then you won't really be able to say, well, this system works, this system doesn't work, because you haven't been there to apply it properly. For trading currencies, you've got a real problem now. You've asked me about trading currencies, commodities, indices, and crypto. The problem is you can't be there every 15 minutes of the day, because you need to sleep at some stage. And again, when you're asleep, I bet you that's when all the good stuff's happening. It's probably when it happens, because those markets will tend to be more active and more volatile and present the trades in times that aren't consistent with when we're awake. So it is problematic. And then you have to say, well, okay, well, this is when I can check the market, I can check every hour. I'm able to do that because I don't sleep or whatever it is, or I can set my alarm and check the market every 2 hours or 4 hours, and I can set my candles up accordingly if that's the way you want to live your life. Which gets me to your final point, which says, is it successful? It can be if you can be consistent with it. It won't be if you're not. And you're closing there, you say, or generally not worth the effort. I'll let you decide. Let's go to Barry, who's asking about LIN. It's probably just a little bit past an aggressive setup and now waiting, I think, more for a turnaround play. But it looks like we've seen the low here. So we're seeing a lot of these really crappy stocks that are finally starting to punch out a low. Is it the start of the next bull market in these crappy little stocks? Hey, I hope so. You know, nobody would be happier than me to see a bull market in these crappy little stocks, because I don't care what they do. I just want to see them go up. Would I buy that now? I think it's a bit early for me, but certainly on the radar, INR, which I think actually looks very good. I think today's it's a turnaround set up now. It's not aggressive anymore, and I think this is actually a really nice looking chart. So I could happily add some risk to that one. And we're going to TLM, which I'm not familiar with. Oh, okay. Well, I think that's a really neat looking chart as well. It's a bit more thinly traded. You can see there the candles aren't as clean, but the price action is very clean. We're getting nice extensions there, shallow pullbacks. If I didn't have this one, I can see some volumes, some interest coming in, and I could add some risk to this one. But it's a more speculative trade, obviously. But yes, happy to add some risk on that. If I had it, no reason for me to be doing anything but running a full risk position. Thank you, Barry. Robert's got FND, which we've actually done. AWC, which is having a tremendous run. We looked at this last week, didn't we? We said that just watch out for the zone there, the red box. If we were to print black candles, no doubt, and you can see I've drawn arrows, if we were to show lower shadows in that zone, then we would have a problem. If we were to close beneath there, we'd have a problem. We've done none of those things. So I'm going to remove those arrows now and boxes where I said just be careful if we see those. We haven't done any of those things. This arrow can stay here because beneath there we've got issues. If I had it, I'd be getting out beneath that. But I can't see any reason not to continue to hold this. It looks very good. I'd almost unequivocally add risk to this, but the problem for me is this next red box, which is not that far away. And this looks great. This, like everything else, is wonderful, amazing up until this point. I mean, as far as the setup goes, it's putting aside the tradecraft aspect, which is you're working out your reward to risk, just the pure setup, this is a 10 out of 10 in terms of price action, trend, candles, good, those white candles, 10 out of 10. But when we get to the reward to risk, it's tougher to make that one work. And I'll leave it up to you. But I think if I had it, 100% I'm holding on to it. If I had it, probably more inclined maybe to add a little bit of risk to it than if maybe I didn't have it, because if I had it, I'm probably making a bunch of money, and then I might give back a little bit of profit. If I didn't have it, I might make a loss, and then I'm going to be really sad about that. So for your mental health, if you didn't have it, maybe it's too close to that upper box. If you get where I'm going with that, all right? We're all humans. We've done that one. Said not that interesting for me, but this one is interesting for me. SFR, we're doing the whole copper suite here, aren't we? Full house of copper. And this one's fine. There was a couple of nasty candles last week, which, this one here and this one. I'm going to just go borderline not enough to do anything about them. Like this, it's close to -1/3, but again, given the balance of the trend, just enough to hang in there with a full risk position, and then came back really well from there. So I think we're still full risk position. I'd be concerned if this became a peak. And then if we saw another candle like this one over here, I'd go -1/3 in advance of a close beneath that trough, and then a close beneath that trough would be the second -1/3, if you get my drift. Let's go to Cocoa. I might do that one later, Robert, when I get to the trading view screen. From Colin, can we look at KLS for a short position? Kelsian. Okay, yeah, look, it looks pretty darn awful. The only problem is I'm not drawing a red box this time. I'm drawing a big green box down here. We're at a point of demand. It could bounce from here. Let's maybe see it just do one more little dink, and then maybe you could go beneath there. And yeah, look, no objections beneath that. It will be setting up for a short beneath that. Yes. It may not give you another dink, but I think there's a dink coming just on the basis. It'll take some time. We talk about it takes time to work through points of supply. It takes time to work through points of demand as well on the way down. AMI, which Aurelian Metals, no troubles here. I'm not sure if I'm rushing in to buy this one. There's just not enough price action and candles. There's not enough in the candles to rush into it for me. But if I had a happy holder, I did say I was going to pick up the pace. Luca, nothing here yet. It's not a turnaround play. It's not even an aggressive setup, is it? That long-term trend ribbon looks to be holding. Let's see it move into the ribbon. Let's see it move into the ribbon with some nice white candles closing on their highs. Let's see that ribbon turn orange, and then let's talk about it. Okay, it could be great. It could straight back up the other side, but it will give us those signals before it does. I think if you're going here, you're going a little bit early for me. Okay, Metals X, we've actually talked about. Barry, I think it looks very good. Nickel Mines, Nickel Industries, NIC, we've talked about as well. London has banned certain Russian metal deliveries. You're correct, I mentioned that earlier on. In my ad, Jesse saying, is he the only one not getting the video? I suspect I haven't had any other complaints, so you might actually be the only one not getting the video, Jesse, unfortunately. But everything is being recorded, and you'll get that a little bit later on. From Jeremy EOS. Long list of Aussie stocks today. We've got some issues here. So this is the space lasers, and this was looking amazing until, I don't know, was it a trading update? I can't say what it was on that day there, but this is assuming that's not a dividend. I don't think it was. That's just species ending event. Not only because it's a massive gap, candle close on the low, and closing beneath troughs. So I wasn't here to commentate on it, but I can tell you 100% this is minus. I don't often write this, but this is -3/3 because it is a species ending event. Do not pass go. Do not collect $200. Species ending event. And from there, if you didn't take that action, you're very lucky that it's actually pushed back up to a point where you could get out at pretty much the same price, and today's candle is confirming that there is a massive amount of supply now building in around that zone. And if you didn't, you'd be remiss, I think, if you were to only do 1/3 here, because you've had other reason to do it. So I think you would compound your -1/3 if you were that way inclined, and you love this stock so much you want to keep giving it a go. I think you're -2/3, and then at most you're still holding on to that 1/3, and this is an at most, because I have told you that that SEE means a -3/3 for me. Let me make that one red, just to put a finer point on it. EML was looking good again. We've had a few of these come out with trading updates that haven't been favourable. And whilst there isn't a single species ending event candle there are still price action events that could have gotten you out earlier than now. For example, the closing beneath those two troughs, and then confirmation beneath the trough in the form of that candle, and then really that candle there and that candle there. They are all minus 1/3 events, and therefore there's no reason to have any risk on this right now. If you still do, I can't say whether you follow my model or you don't, that's your prerogative. There is some hope here at the long-term trend ribbon that we might get a bounce and then see what you can get out of it after that. There should be some demand here also, but it's just into the too hard basket now for me. We have seen some other really interesting charts today. From Michael, we've looked at AIS VNM, which is not that one, VNM. I might have to go somewhere else to find it, and I won't find it there. Let's go here, VNM. I don't have a VMM, sorry. There you go, I've got that one, Regis Mining. It looks good actually. Yeah, I mean, this is, well, I guess it's kind of a turnaround play, but it's come back and it's hit the long-term uptrend ribbon. It's held it, full credit. It's held that ribbon, and we're coming up the other side. There's been a little bit of an influx in volume. Tells me we've removed some of the supply that was working around this area here, and some extra demand coming into the system. A little bit of a pullback today. The next white candle for me, I could have a crack at this one, but today's candle is not sufficient. Let's go to Kogan, which has got major problems here. So, look, is there a minus 1/3? Look, I think this candle is very close to it, but maybe just got out of jail just on that lower shadow. But then this candle here, 100%, that's a minus 1/3 for me. It's confirming this lower peak. We didn't have any obvious points of demand here. There's certainly one there, and you have close beneath that. There's other lower peaks here. Look, I think you're out of this for all intents. I can't see any reason to still be in this one, and trying to find earlier 1/3. I think it's a bit of a pointless exercise, because let's just fast forward to where we are right now, which is I can't see a reason to have any risk left on this position. But I'm guessing and hoping you actually had a pretty good run on that, so that's fine too. Let's go to APX, which we were thinking about for an aggressive setup, a turnaround play. And certainly, look here, I think that's an aggressive setup. We're seeing some volume come into it around there, and then certainly here. That's probably the last point you could do it, because I think any closer than that, any closer than that to the long-term trend ribbon, it's getting hard. And then maybe here also. But yeah, not now. Not now. If you've got risk on this, it's a very small amount. That's all. I'm not adding risk on it at this stage, based upon those last two candles. That's US. FXG, Felix Gold. I've got some interest here. Look, a big spike in volume. Having said that, it's not a lot of volume. It's 1 million shares. This is hardly traded. It is sketchy at best. It's hardly traded. I'm going to go pass. It's just too small. Too irrelevant as far as the market's concerned. If I can take those thoughts out of my mind and just purely look at the chart, there's some interest coming in, but everything's relative. When I say some interest, that's 1 million shares is not a lot for a 7-cent stock. Okay, so instead of all over the chat rooms, it's all over one page on the chat rooms. It's just not my style. I'm going to go past, but if you've got some special affinity with it, Brad, then maybe. Yes, if that's the case. Drone Shield, I think, is fine. Having said that, $1. So this is how my model works. Everything's amazing. It's 10 out of 10, hunky dory, and yet I say, yep, out 1/3 because we hit $1, and that's just the way I do things. I can always get back in, but precautionary measure, big round number. I'm going to take 1/3 off the table. I'm still plus 2/3, so happy holding on there. Obviously, I'm not adding risk because I've got to deal with $1 first. EOS was a capital raising. There you go. And we can't see these things, okay? These are things that we don't know are going to occur. All we can see is what we can see, and that's not where we want to be. It's that one there. So that was a capital raising. So that chart was 10 out of 10, and it is the universe is unfair, ladies and gentlemen, when this stuff happens to us. But we there's no point. Look at that. I mean, it's the perfect chart there, and there's no point complaining to the universe. Okay, you can try complaining to the universe, but the universe doesn't give a shit. Okay, let's head back up the list. We're going to head over to the US, and I'm going to change the screen so we don't screw that up again. And we're going to go from Japanese government bonds, which are looking scary, to Amazon, AMZN for Peter. And I can't forget my offline requests, I'll do them next. Fine, happy holder, you know, as sketchy as we saw the Dow, that's sketchy, Russell's sketchy, Nasdaq's losing momentum, and this thing just keeps chugging along. It doesn't care about any of that. Happy holder, but, you know, we know what to look for to not be a happy holder anymore. Okay, INFA, Informatica. I'm going to go ditto. I won't be buying it on the basis of Friday's candle, but I would have happily bought it on Thursday's candle. I know that sounds ironic, but that's the way the model works. But a happy holder, the Friday's candle is not even close to being a reason to manage a risk at this stage. Let me do those offline requests before I we're going to the TSX for, who asked me about this one? I can't remember. Maybe it was Craig. Let's go to IE, and I might not find this. Ivanhoe Electric, there you go. Looks like hay. It's a turnaround setup. We're going to find some resistance. Well, I shouldn't use that word. We're going to find some supply. That's what resistance is, ladies and gentlemen. Surprise! Resistance is just excess supply. Who would have thought? And support is just excess demand. So there, now you know. We're going to see some excess supply around there. It's just not exciting me. Not to say it can't go up. It's more likely to go up than it is to go down. You can see on balance, the short-term uptrend, price action's good, high peaks, high troughs, predominantly white candles. We've bested the long-term downtrend ribbon, which is now transitioning through the amber phase. And we're coming back, we're testing and holding, it's providing dynamic demand. So there are many ticks in many boxes here, but I'm sure we're going to find better turnaround setups than this if we haven't already this evening. Let's go to Zillow Group. This one definitely is for Craig, and maybe that was Ross. I can't remember. It came through Twitter or an email. We've got problems here. I don't know if you're looking at Zillow for a short. I actually think it looks pretty good for a short. It's just broken through. I mean, the most compelling thing is this huge black candle. Then we try and push back up. We rally. Oh, Zillow's cheap. We push back up. We stop at 50. We get this wonderful upper shadow, follow through with a nice black candle. The long-term trend ribbon is now impeding price action. There's that word. It does it again here. And now we're coming back. Black candles. We're working through the demand here. We're working through it, right? We're not testing it. Still got another dink to go. I'd short this one tonight, okay? And this is, and we talk about, how you have your greens. Your greens as part of a balanced diet, not the greens of political party, okay? Be careful what I say, because I'm not sure if that's part of a balanced diet. But certainly your greens that mum told you to eat as part of a balanced diet, and you'd have a couple of shorts in your system as well as part of a balanced portfolio. Maybe that's the one. I'm not sure if you're asking me about it for a short, Craig, but that's all I can see on screen at the moment. If there are Greens supporters out there, I apologise for making you angry. Let's head back up the list and go to XME. Problems there, that last candle. I can see why you'd own it before that last candle, but I can't see why you're going to own it after that last candle. It's disturbing in and of itself. It's a -1/3. I think it's big enough for me to go -1/3 if I had it. If I didn't have it, obviously I'm not going to buy it because of the big black candle at the end of that chart. Let's go DVN. And again, ditto. We're seeing some trends that were great that are succumbing to this broader market weakness. And again, if I had it, I think I'm going -1/3. Think about this: we're not jumping out of stuff. If we get the next white candle, it keeps going. We're still happy days, but there's enough in it for me to be cautious there and go -1/3 for you, Jeremy. And I need to do Floki, which is going to be, I can find it from here, FLOKI, which is a cryptocurrency, and we're going to do this one for Craig. Pull back, hit the long-term uptrend ribbon, has bounced. I would need more convincing candles than what I can see on screen to take the punt on that one for an aggressive setup. So I'm still going to be a pass on that one, but I can see why you might be thinking about it here. Hey, let's see another big white candle with some volume, and then if if you had nothing else to do with your time, mate, then that's what you could do with it and your money. But pass for me for now. I've done that. I've done all of those. Okay, online requests heading back up the list. If you put anything new on the list, I won't see it because I'm heading back up the list. We have done all of those. Therese saying that she has the video. Thank you for confirming, Therese. Jesse, you are the only one. We're heading back up the list. We're going to do cocoa. Okay, so let's head over here. Very interesting. I haven't had a request for a commodity for a few weeks, and we're going to head up to over here. So cocoa looks amazing, isn't it? This is coffee. We actually talked about this, didn't we, before Easter? And we said, it's this amazing trend. Easter Bunny's going to be going broke because he's going to be paying so much for his Easter eggs, and there's nothing. This is not stopping. I mean, that looks amazing there. So if I had it full risk position, if I didn't have it, I'd be adding some risk to that one. That one was for Robert. Let's go. I've answered that one for Sudesh. Heading up the list. From Adonis. Evening, Carl. Evening, Adonis. Looking to up my exposure on copper trade. And then, I'm very confused, Adonis, because you tell me you're looking to up your exposure on the copper trade and you're asking about copper stocks. And yet, look, first of all, I said, I think we're at a bit of a point of supply. We're probably going to have a bit of a pullback. So I'm questioning that in that regard. And then I'm saying, well, if you think copper's going up, mate, why wouldn't you just buy copper? But that's not the question that's being asked. The question is, I'm going to buy stocks with expenses, stocks with debt, stocks with operational risk. That's what I really want to do with my time and money. In that regard, Freeport-McMoran is one of the biggest copper producers in the world. Lo and behold, Friday's night candle is an absolute wipeout candle because we are finding some supply there on the copper chart, and probably this is going to pull back to the light green zone and then throw in a bunch of candles and head back up again, maybe days. But no, look, I can't be a buyer there on that basis. I'm guessing based upon your commentary, you're not in it yet, Adonis, so I don't have to talk about if I was in it. But hey, if I was in it, then obviously for me, that's a big minus 1/3 candle. Let's go to Adonis's second one, which is COPX. Global copper miners. Okay, so hey, if you want to play copper, buying one copper stock or just buying them all, just as problematic in my opinion. And there's a big wipeout, no doubt, because Freeport-McMoran is a big part of this particular ETF. And that's a no for me on that basis. But not to say we can't look at it again in the future, but clearly not on that last candle. But hey, I can't see the future. I don't know the future. Let's keep going. To AMD for Brett. Advanced Micro Devices. We've got problems here, and we've had problems here for some time, and hopefully you are all shouting at your screen, and this would give me great joy if this was the case. That big black candle, Carl, that species ending, mate. Can't do anything with it after that, mate. I'm here. That bad boy, no interest from there. Hopefully, you're also looking back at something like that, which in and of itself, I believe, is minus 1/3. I mean, that's a monster. Look at that. And really confirming there, probably a minus 1/3 there on that basis. And I think you can get 2/3 out of this trade very quickly. And then the final third, I think probably on that day there, because you're taking out this little trough, you're closing beneath the short-term trend ribbon. We talk about that often, don't we? And you're probably all out of it by now. And if you weren't, then you've got that big one there. So I'm not sure why. Brett, you're asking me about that one because there's plenty of minus 1/3 on screen there. INTC, but hey, even if you're just asking me about it to maybe bash you over the head a little bit, that's okay too. And what are we doing with these, Brett? What are we doing? Are we looking for longs? Are we looking for shorts? Hover over message to pin it, says me. What did I do? I must have clicked there. I don't know. I've clicked something accidentally. Ignore whatever I've written down the bottom there. Hover over Intel to pin it. No, not for a long. And there's a zillion minus 1/3 after this high here back in December for Intel. How about that? A big blue chip stock, on the way up, we were singing its praises. But the market told you when it was no longer time to be in it. There's your species ending event. Look at that. That would have been earnings. January. You're looking at December quarter earnings right there. Species ending event. And look how hard it is for them to come back from those events. They fight, but the battle is won. It's already won. The price action is telling us that. That's why I've given you the gift. I've given you the gift of price action, ladies and gentlemen. And once you see it, it's like those 3D bloody pictures. And you've got to squint, you've got to strain your eyes, you've got to look past the bloody horizon, don't you? And then you can see the damn thing. It's like, oh shit, how did I not see that before? That's what price action is, ladies and gentlemen. And on that note is where I leave you this week. Let us talk about the disclaimer one more time, which says that everything we've discussed this evening, it's information, it's general in nature, has not taken into account your personal financial circumstances, objectives, or needs. So before you do anything with it, consider it carefully or seek the help of a financial professional to determine its appropriateness for you. Trading is risky. We've seen some risk come into the market right now, so be very careful with what you're doing. But ultimately, it is you and not I who's responsible for what you do. On that cheery note, it has been a pleasure chatting with you this evening. I had fun. Hopefully you had fun, learned lots as well. And I'll catch you next Monday, same time. All the best for your trading and investing. Until then, bye-bye for now.